Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Kunyi. Good night. Today is Thursday, January 15th, and I'm Huang Pengru. Then this one. We shouldn't be able to see the footage right now, right? Oh, okay, we're going to talk about some topics today. Right now, it looks like capital is continuously rotating, and there have been some unexpected situations. Actually, after TSMC released its earnings report today, it marked another turning point. The latest situation seems to be that funds are moving into tech stocks, but before this, the capital was actually left in many different areas. So I'll take a look at that briefly. In addition, I'll talk about how Netflix is responding to this situation, what changes it's currently undergoing, and whether it's still within its current range. What are some possible paths going forward? Next, I'll talk about the significance of the US government investing in Al Harris. Alright, so today we'll be watching this trend, and we'll also be tracking some ongoing data, which will be released at 9:30. So if we have enough time, we'll take a look at that as well. Alright, so as for the number of people in the fund, the expectation is 215,000 for the first time, and the previous figure was 208,000. The continuous figure is 1.897 million, while the previous figure was 1.914 million. So looking at it, the initial number is slightly up, but the continuous number is down a bit. Okay, it seems like it's still at about the same level. As for the US dollar index, there hasn't been much change at the moment, but looking at it now, it seems like it might be heading in a slightly stronger direction. On the other hand, over here in the bond market, there haven't really been any significant changes. It's still fluctuating within a range. The situation is the same for the 10-year and 30-year bonds. You can see that the stock index has dropped quite noticeably over the past 2 days, especially yesterday when the drop was more significant and there was a relatively long lower shadow. But today, it looks like the sector rotation game, especially in tech, has shown a clear improvement. Given this situation, there should be some rebound, and the same goes for the cyclical stocks. So in the past few days, things haven't been great. The Nasdaq is in a similar situation, actually. The Nasdaq's condition is even worse. As for the S&P, it's the same story. All right, so actually, over the past few days, you can see that all the major stock indices have either declined or showed some lower shadows, meaning there was some buying at the lows. For example, the S&P has already dropped for 2 consecutive days over the past 2 days, but some other indices have actually gone up. So which ones are those? Even with a trading volume of just 2,000, they're still continuing to rise. And the SPW, the 2 heavyweights in the S&P, are still going up. So you could say that it's really just a few things driving the gains. As for what's actually going up, we'll talk about that in a bit. The latest news is about TSMC's earnings call. This earnings call once again exceeded expectations. In the latest quarter, TSMC's revenue was 1.05 trillion NTD, with a gross margin of 62.3%, an operating margin of 54%, and a net profit margin of 48.3%, almost 50%. The EPS was 19.5 NTD. Their first quarter forecast beats market expectations across revenue, profit, and margin. For 2026, they project capex at 52 to 54 billion US dollars, 70 to 80% targeting advanced process technologies. Additionally, 3-year spending will surge as capacity expansion in Taiwan and the US accelerates. This projected capital expenditure for 2026 is much higher than previous market expectations, which were around 46 billion US dollars, so it's a substantial increase. By 2029, revenue calculated in US dollars is expected to grow by about 30%, which also exceeds expectations. As for gross margin, the company itself estimates that it can surpass 56%, maintaining a relatively high level. This is due to strong demand for certain production capacities. You can see that actually in the past. Even though there have been some fluctuations, the company's gross margin has continued to rise steadily. Their long-term goal is 6%, which is an increase compared to their previous long-term target. But what's the significance of this guidance? Actually, it's pretty important. It's now greatly boosting overall confidence in the tech sector. Many tech stocks are rising in pre-market trading, especially the Magnificent Seven. Overall, you can see that semiconductors, AI, and economic growth are all being positively affected. Looking at the main themes in the stock market, what about the international markets? In markets with AI like Taiwan, Japan, Korea, and China, their performance will likely be better than those without much AI, like India. Also, sector rotation might be limited for now. That's the situation. Sector rotation might be even more limited and probably won't last that long, so the impact may not be significant. This means that in the end, the main focus will likely return to technology. As for the US stock market before the opening, equipment stocks are generally rising and tech stocks are showing a rebound. In addition, metals have pulled back, while the ADRs of the Taiwan series are up more than 5% in pre-market trading. So that's the current situation. Right now, you could say that, as we mentioned a few days ago, it's best if the tech sector rises. It seems that this is indeed benefiting from that, and with the current earnings calls, there's a general upward trend. So for today and the next couple of days, today and Friday should look pretty good. As for next week, we'll have to see what new earnings reports come out. There will be new updates. That's the current situation for TSMC. It's showing a noticeable increase in pre-market trading. So let's keep an eye on that. Will the pre-market trend carry over into the market open and continue to the close? If it does, it should help stabilize overall market confidence and direction to some extent. Here, we're looking at ASML. For ASML, I'm tracking the current trend of its trading on the European stock market. You can see that there's still some back and forth between bulls and bears. There's an upper shadow and a doji candlestick, so we'll have to keep watching what happens next. We'll have to see how the market moves in a bit, and the stock price could still change. Next, we'll be looking at some government developments. Financial institutions have mentioned that public support in the US for Trump's immigration policies is quickly collapsing. It's possible that there will be midterm elections this year, and if the Democrats win, they could take control of the House of Representatives. If they do gain control of the House, they could cut off funding for ICE, and might even try to impeach the Secretary of Homeland Security. So what we're seeing right now is, overall, you can see from this chart that support for ICE is pretty much split down the middle. 46% support it, while 43% oppose it. As for whether or not to abolish ICE, 46% support abolishing it, and 43% are against it. Among those who support abolishing ICE, 77% are Democrats, while 70% of Republicans are against abolishing it. So the division here is very clear-cut. It's split along party lines. And this issue is part of Trump's economic agenda, which by now everyone is already. Because of tariffs and inflation, people are really struggling to make ends meet. On the other hand, immigration policy is actually a political issue, and if people are dissatisfied with his immigration policy, you could say that overall, Trump's policies might have 70 or 80%. People already found it hard to accept from the start, or were already somewhat turned off. Now, looking at the situation going forward, it seems like things will only become more and more polarized. We'll just have to keep watching and see what happens. As for phone numbers in the market, recently, some friends have been working on this. The highest annual interest rate for credit cards is capped at 10%, and that's for a whole year. Since this announcement, the stock prices of many financial institutions have dropped significantly. So what will happen next with this situation? If this policy continues to be enforced, then it's possible that these institutions really won't issue cards with an interest rate over 10%. But what they might do in response is simply cut off those applicants they think aren't worth the risk, or those they feel. For example, when you apply for a credit card, if they think you might default or might not be able to pay back the money, they'll just refuse to do business with you outright. So in this case, it actually ends up hurting people who really need access to credit even more. From this smart car meeting and its outcomes, we can see that policymakers often have good intentions, or at least believe their policies are well-intentioned. Then they go ahead and implement it, hoping to solve some social problems. But as the saying goes, where there is a policy from above, there are countermeasures from below, which really explains the situation well. It means that all kinds of organizations or entities at the lower levels, or after companies receive these kinds of policy directives, they still have to deal with their own biggest interests, which means that in the end, the outcome might not necessarily be the best for society. So this is also why usually socialism or communism can't achieve the most effective and optimal allocation of social resources, because within the system there will be These kinds of distorted motivations, and just like on the right, everyone will try to find new ways to get around these things, which leads to even more inefficient allocation of resources. All right, so next in today's market, both Goldman Sachs and Morgan Stanley released their earnings reports. These two are actually pretty important because right now people are seeing a slight uptick and overall things are looking pretty good. So there should be a chance to turn around the recent slump in financial stocks after their earnings reports. Over the past few days, financial institutions have been releasing their earnings one after another, but the performance hasn't been great and most of their stock prices have been falling. Everyone is watching to see if, with the earnings reports from these two relatively large financial institutions today, things might change to improve the market's current view of financial stocks. But Goldman Sachs said that last year's total revenue was $59.4 billion, and investment banking fees accounted for 22%. Overall, it shows that the M&A and IPO markets are warming up, and the rebound is modest. Meanwhile, Goldman Sachs mentioned that the assets under client management have continued to rise, now reaching $8.9 trillion. Looking at the bigger picture, you can see that Morgan Stanley has undergone a significant transformation from before to now. A large part of its business now comes from this area. Wealth management, which is relatively stable, can withstand market cycle fluctuations and isn't affected by things like IPOs and M&A advisory, which are more cyclical. In pre-market trading, it's up 1.78%, so the increase is quite noticeable. All right, so next let's get back to our main topic from the beginning. As we can see, over the past few days, most of the stock indices have actually been falling, and the declines have been quite significant. However, there are still companies like 2000 and SBW that have continued to see healthy gains. So who is actually rising? You can see that it's mainly the consumer staples sector. This chart here actually compares the changes in the indices of bank stocks and consumer staples, and you can see that in the past, bank stocks in the financial sector were indeed trending downward. There was a relative downward trend for them, while in contrast, consumer staples have actually been trending upward. So regarding the consumer staples ETF, I looked up the SLP, which is the State Street Consumer Staples Select Sector ETF. This ETF, starting from this year, specifically January 15th, 2024, has had a return of 5.43% so far this year. That's actually quite high, especially since starting from December, as I've mentioned, from the end of December until now, even though there were some fluctuations in early January. There was a noticeable drop a few days before January, but afterward it picked up speed and rebounded. So looking at the current situation of this consumer staples ETF, it shows that there is actually capital flowing into the sector. This has been the case since the beginning of this year. As for the gains among its component stocks, many of them have actually seen double-digit increases. Let's talk about the first and second companies, which are Kroger and Dollar Tree. Next, let's talk about Archer Daniels Midland. It's a leader in the grain industry, focusing on processing oils and grains into various products such as food, animal feed, and fuel, among others, and then distributing them to different production sites and end markets. So this company, since it's involved in grains and is essentially a commodity-based business, needs to be very stable and is not easily affected by the broader environment. It's considered a highly defensive company. People generally think that if you buy this stock or invest in it, you're taking a defensive approach. Usually, this kind of company tends to perform relatively steadily when the market is being positioned. For example, last year, around February and March, its performance was relatively decent. As for now, the stock has actually seen a noticeable increase so far this year. As for this stock, looking at its historical performance, its last really good period was from 2021 to the beginning of 2022. That was also when US inflation was rising, and afterwards there was a rapid interest rate hike to curb it. This is a story we all know. Now you can actually see that it once again has a very clear upward trend. So does this suggest that inflation might be a bit hard to bring down, or that going forward, since it's unlikely we'll see more rate hikes now, everyone is talking about how much rates might be cut? So in the future, is it possible that under this backdrop, inflation could make a comeback? Correspondingly, this would make the stock more attractive to capital, or at least a temporary safe haven. This is an indicator everyone can keep an eye on. Another thing is, to bring it a bit closer to the present, if we look back a little over a year ago, around January or February last year, you might remember that the S&P 500 had a significant drop overall, and that decline lasted quite a while, basically throughout February and March. But you can see that bouncing global. From February to March last year, even though there was a drop in January, during February and March, it actually started to climb steadily. And at one point, there was even a noticeable increase. So if bouncing global keeps going up, some people would. This phenomenon is still being suppressed, but at the moment, it actually looks like for TSMC stock, the earnings call did boost market confidence, so the current situation should improve a bit. Now it's just a matter of seeing whether today's confidence in tech stocks can be sustained. Also, you can see Dollar Tree. Let's compare Dollar Tree and Dollar General. What's the difference between the two? Since we didn't make any in-person purchases, today we're just looking up information online. We found that Dollar Tree is actually more. True to its name, it's really just that. A dollar store, or rather most of its products, are sold at a fixed price of $1.25. So you can buy things you need and people feel like they're getting value or a good deal. As for Dollar General, it still seems like a store that sells a wide variety of things. Even though it's called Dollar, its prices are actually, there are price fluctuations. It's not really around $1. So why is that? Actually, it's also considered a discount store, and it does offer a lot of different discounts, but overall, its prices are still relatively high. So for now, Dollar Tree feels more like the version of a dollar store as I understand it. What about Dollar Tree? It's also been consistently rising, meaning Dollar Tree is one of those stocks that benefit from lower living costs. This is especially true if you're facing financial pressure or inflation. His income will be relatively high, so more consumption will be in this area. Ugh, people will go to these really cheap stores to make up for their expenses and balance out their spending. So if these stores are seeing growth right now, it might also be a sign that the economy may not perform as well as everyone hopes in the future. So this is something worth keeping an eye on. You can see that Dollar Tree had a pretty significant increase in the past, which happened around the same time as Bounce Global. That was during late 2021 to early 2022, when inflation was rising relatively quickly. As for what will happen next, if we take a look at the stocks of these two companies, maybe we can find more clues. Alright, next let's take a look at Netflix. Netflix is set to release its earnings report on the 20th. Next Monday, the stock market will be closed. So basically after today and tomorrow, it will be the 20th, and that's when the earnings will be announced. So the timing is actually pretty close. So let's see if there's anything going on recently. The most important recent event is that it's about to surpass Warner Bros., but it's only acquiring the streaming business I've met. And also its film and television segment, but the cable TV channels are not part of the acquisition. Originally, the offer included both cash and other terms, but now, due to a Paramount situation or some challenges, it might turn into an all-cash acquisition. You can see in the screenshot below that the original offer was a mix of cash and shares, so there was a condition. If the stock price fell below a certain level, they would compensate with more shares per share, meaning they would pay out more stock. Right, if it were an all-cash acquisition, then this issue wouldn't exist. But since it's cash, it means you have to pay the entire amount in cash. According to the previous agreement, that would be $82.7 billion, which is a huge sum for NFL. So right now, its stock price is much lower than $97.91. So the stock is actually under some pressure. The hope is that after these 4 financial reports, we'll see if Netflix will announce more details about the acquisition. Right now, people are really worried about whether this acquisition can actually go through. That's the first concern. The second is what kind of impact this acquisition volume will have on its finances. If it can go ahead and at the same time, if they can ease everyone's concerns and at the same time reassure people that the company itself will continue to grow rapidly, then at the current level, there's a chance the decline could stop. Because if we look at the chart, we can see that recently there's been a very obvious and prolonged drop. So if you're thinking about getting in, you might want to wait until the earnings report clarifies things, like the details of the acquisition and future growth, before making any decisions. For now, it's still okay to just watch for a while. A better time might be after they make an announcement, and then you can reconsider. As for Netflix, it's basically been dropping and dropping, and recently it's also reached. It's at a critical level now. Why is it a critical level? Because it's actually not far from the support it had back in March and April last year. That low point from March and April is like a reference. And if you look at this area, after the $600 mark and then a sudden plunge, the rebound, well, the place where it rebounded, happens to be the low point from the drop in February and March. You can see that recently it's already very close to that February-March low. So if it were to drop further, the downside is actually quite limited. That's why in all likelihood, it's going to stay around this area. As for Netflix's future movement, it's likely to rebound. But as for how quickly it will rebound or how much it will rebound, that's actually uncertain. However, what's more likely is that the stock price around here probably has a chance to stabilize and stop falling. All right, next up is about the US government and LC Harvest. So this news is, this is a relatively significant change. LG Harvestia is a defense contractor. The US Department of Defense is expected to invest in its missile division, not the entire company, using $11 convertible preferred securities. The main purpose of this is to significantly boost the development of propulsion systems, specifically the engines for these missiles. Why does the government want to invest in LT Harris? It's because right now the US wants to start using its national power to achieve more direct objectives, according to its current doctrine. They want to use investment to increase this. Missile engine development, because in the past, the Department of Defense would just write a check and everyone would submit their proposals, but you wouldn't necessarily be motivated to speed up or ramp up your production in that context. Previously, they would just issue the funding, but they didn't get the returns they wanted. So now they're getting more actively involved, directly entering this market themselves. Welcome, everyone. In the past, procurement couldn't force contractors to expand their facilities, so there might have been some financial maneuvering and so on. What they really want is for everyone to actually increase physical production, not just engage in financial operations. As for the target of this investment, as we just mentioned, it's the department responsible for missile propulsion systems, which produces a lot of weapon engines. What do they make? They manufacture engines for the Patriot missile and the THAAD system, among others. These two are mainly for air defense and anti-missile purposes. Another example is the Tomahawk cruise missile, which is a core weapon for long-range strikes. In addition, there is also the Standard missile, which is the core of naval defense. So you can see that all these things are important resources for the military arsenal. So at present, the United States also wants to further expand its own arms stockpile and its arsenal of weapons that can be used to strike different adversaries. These funds will be used for modernizing production facilities and will also increase the number of production lines. It's expected that by 2030, production capacity will be more than tripled compared to now. So this is a very clear goal. This actually also means that the government is driving changes in the industry's ecosystem. As for the United States, as we've mentioned before, it's starting to continuously shift toward the so-called China model. So what is the China model? It's when the power of the state is used to drive industry. Development also has a direction. Another thing is that this situation is relatively unique because, as we mentioned at the beginning, there's LTH and it's a broadcasting contractor. But when it comes to defense contractors, it's not just L3 Harris. There are many companies. Now, the Department of Defense is, if the Department of Defense shows a particular preference for one company, it actually changes its relationship with the contractors. The relationship may no longer be as simple as just issuing contracts and growing together. It could mean that the Department of Defense is directly getting involved itself. That is, directing and supervising some of the actions of these contractors itself. So the main point is to address the shortage in America's arms supply, strengthen resilience, and change the industry ecosystem. Right now, the government is stepping in mainly to ensure market competition. Because even though there are many contractors, when it comes to missile propulsion systems, there are still only two companies. That is, it's just L3 Harris and Northrop Grumman, so there's still a desire to ensure domestic supply. This is the current situation. You can see that actually coordination is underway. There will be more and more developments in the future, and this is also the first time our government is investing in defense contractors. Going forward, this investment will likely continue, expanding both the areas and the scale of investment, and will also involve different industries. You can see that the stock prices of these L3 Harris companies actually rose significantly after this news, but in the end, they could not hold on to those gains. Looking ahead, it seems like there will still be a slow, gradual upward trend. Let's take a look at the pre-market strengths and weaknesses, because for now, today, the system seems a bit slow here. Let me see if it will update in a moment. First, let's look at the entire A-share market, and from a volume perspective, you can see that overall, before the market opens, stocks like the 7 giants and some well-known tech stocks are all showing gains. So, overall, it looks like the market sentiment has clearly improved. The key is to observe whether this can be sustained until the close. If it can be sustained, then that's pretty good. So to answer whether there are gains, yes, there are gains. Other than that, there's Micron and then Aaron. SM, MD, and so on are all showing gains as well. Additionally, Broadcom and SanDisk are in pretty much the same situation. Looking a bit more at the rising stocks, it's actually not just tech stocks that are going up. Some energy stocks and pharmaceutical stocks are also performing. So at the moment, it looks like the overall market is showing a clear upward trend. There's an opportunity here. As for the declines, things are still okay here, nothing out of the ordinary. Nothing in particular to watch out for. If we just look at the S&P version, it's even clearer that right now the main driver of the overall rise is tech stocks. So today, the market sentiment should be pretty good. As for the index, it also has a pattern, with a 1.6% gain. In terms of the main gainers, as we just mentioned, equipment stocks have gone up quite a bit, such as companies like KLA, Applied Materials, Lam Research, and also Teradyne, among others. The second category is memory stocks, which have also seen a significant rise, so overall things should be pretty good today. But it seems that this is partly because these stocks had been lagging for a while, so going forward we'll have to see if they can maintain this momentum. Looking at the pre-market right now, the momentum has actually started to weaken a bit. Just now, the pre-market still closed higher, so it looked like things were starting to weaken. Right now, the question is whether Goldman Sachs can hold up. If it doesn't perform well today, can tech stocks manage to stabilize the situation? If they can, then it's still okay, but if not, then today's relatively weak trend might continue. Alright, that's all for today's update. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.